Hello, welcome back to Miner Network. I'm joined again with Henk de Hoop, the CEO of SFA Oxford. We're in a bit of a turbulent time period at the moment in PGMs. That's obviously why we wanted to get you back onto the show. Before we go into it, maybe you could just give us a little bit of flavor as to what you do, who SFA Oxford are, just because I think it is quite important for the audience to know sort of how much pedigree that you have and that you are a big authority in this space. So maybe just a little bit about yourself to begin with, then we can jump straight in.
Thanks, Peter. I'm a mining engineer by background. I spent the last 30 years in South Africa, and last year became the CEO of SFA Oxford. SFA Oxford has been around for about 20 years, studying the PGM markets in lots of detail. And over the last few years, we've added battery materials research and also hydrogen economy research to the package. But overall, my own involvement in PGMs has been pretty much my whole career since I landed in South Africa.
Perfect. Well, you've just mentioned South Africa there, and I want to get on to the supply constraints going on, especially with the rhodium price going down and palladium price going down recently. But just tell us over the last couple of weeks, in your view or in a market analysis, what's happened from a price perspective, and maybe lead into what's been causing some of this.
Sure. There's obviously been quite a bit of pressure on the PGM basket, platinum, palladium, and rhodium, and that seems to have accelerated a bit last week. There was initially certainly a bit of a strengthening US dollar impact on those prices, but the last, call it, set of declines have been quite extensive. And just to give you an extent of how prices have corrected, the rhodium has peaked a while back at $30,000 an ounce, hung around at 18,000, 15,000, and yesterday dropped below $10,000 an ounce. Rhodium had a particular extra, called kick down, because there was an announcement in China from a big glass fiber factory that was putting some of its rhodium back on the market. It had something to do with the thinning of the bushings and less rhodium needed. It's not necessarily a structural issue. It is basically a management of your metal supply issue, but it did hurt the rhodium price quite a bit. I think it does show you a little bit as well that there is underlying weakness in demand. And we believe that, first of all, the prices that we saw previously, both in palladium and rhodium, were excessive. So there's a bit of normalization happening, but we also shouldn't forget that we're facing a recessionary environment globally, and that affects many sectors of demand, including auto demand.
Perfect. You mentioned there that there is underlying weakness with rhodium, and a lot of this has come from what you were mentioning there with the Chinese manufacturer. How reliable is that in terms of a source of? I mean, how much of rhodium is actually dependent on Chinese manufacturing into this fiberglass? So you were mentioning there, is that a core part of the supply chain?
It is actually not, but the issue in the rhodium market, it's a very illiquid market. So much of the rhodium, the bulk of the rhodium, 85% or so, is going into the car market. A lot of that goes into long-term contracts indirectly to car manufacturers or fabricators. So it leaves in a market that is essentially a 1 million ounce market per annum. It leaves very little to trade on the spot market. So if excessive amounts are in the whole scale of that market, in what seem excessive amounts of rhodium do get offered, it can have very large price swings as a result. And if you look at last 20 years, the rhodium price is notoriously spiky, and it's particularly for that reason. And then hence the way down can also be very fast, and that happened essentially last week.
Okay. And how does this impact the actual mining companies themselves? Obviously, especially in South Africa, where maybe you can touch on how much of their profits or how much of their margins are based on rhodium, platinum, palladium. Obviously, we're seeing both palladium and rhodium really are the ones that have taken the most beating over the last week or two. What sort of environment does this create in terms of supply chains moving forward, especially from South Africa?
There's a couple of aspects to that question, Peter. First of all, we're coming from extreme heights. So the operating margins of the mining companies were very rich, 60 to 70% at the prices we saw in, for example, 2021, call it. And we've been sliding since then, and the results for 2022 show that already a little bit, but there's still very handsome profits. In running up from, call it, the numbers in the thousands to the 30,000s per ounce rhodium prices, you ended up with nearly 45% of your income coming from rhodium alone. which is well out of called the historic range. Normally, platinum carried the basket of metals that the miners mined. That has been very much pushed to the background, and it became eventually a palladium and rhodium driven revenue line. So with both those now being having corrected quite substantially, it has obviously a large impact. The South African miners do have a bit of a shock absorber, which is the rand, which has been weak over the last couple of months as well. Partly, obviously, because of some of the concerns around South Africa's electricity crisis, but also there's the financial picture in South Africa isn't looking that great, and the outlook economically isn't looking that great. Plus, the US dollar obviously didn't help the strength of the US dollar. So we have already quite a decline in the revenue side coming through, but what then hurts them eventually is if you have cumulative inflation on your costs that is double digits, you basically you have this pressure coming from both sides. Costs are rising at an unsustainable rate, and your revenue is now starting to hurt you. So it's obviously in the year ahead going to be a bit tougher. They're still going to be mostly profitable, but with rhodium at 9.5, if that would fall any further, it would start to hurt some specific operations.
Okay, we obviously spoke about last time, especially in South Africa, the mining is becoming deeper, more costly anyway. You're now adding on this inflation and a reduction in cost. I mean, I guess to begin with, is this correction, do you think, short term or is this long term? And if it is long term, how long are the South African mining companies really going to be able to stomach this?
It is probably a structural reset. The palladium markets we've been looking at for it to turn to surpluses essentially this year and next year, and from then onwards, basically consistently in a surplus. This year, we could still, depending on several factors, for example, there are still some issues in recycling and getting the volumes there that we initially anticipated. There's certainly not as yet as much damage to Russian production, but that could certainly emerge. But at the moment, that is still coming through. But we do expect surpluses definitely next year and the years after. And there's a couple of very specific reasons for ICE growth is not as extensive as it would have been in past, call it post-recession recoveries in car sales, partly because of BEV penetration, and it would probably hurt palladium the most. Then secondly, the recycling volumes coming out of China are going to be very impressive. It's because China became in the shortest space of time the largest vehicle market globally, then started to catalyze those new cars at a much quicker rate than Europe. And now a lot of that is coming very quickly to the scrapyards. So there's going to be a bit of a boom in palladium coming from the Chinese recycling markets that also then drops Chinese net demand. And overall, it's very difficult to see whatever scenario you put in of a sustainable palladium price, say above $1,000 an ounce. We see that actually coming down below that in the years ahead. And it will hurt certain producers, obviously, quite significantly.
What's I mean, even under $1,000 an ounce for palladium at the moment, I mean, I'm even thinking of new developing mines around the world that are looking to potentially construct and go into production. I mean, a lot of these are basing their price environment on 1,500 or even higher. I mean, if we're having any supply issues, sort of, especially like you were saying with electricity in South Africa, and we potentially have supply issues in Russia, what's the obviously if the palladium price is going down, it's going to be kicking the can down the road for these development companies going to production. Surely there are still massive risks here of there being a supply deficit just on one hiccup alone in the supply chain.
I would agree that there is risk of supply disruptions, but it has to be reasonably dramatic for it to, call it, offset the bigger structural demand side impacts of palladium. South Africa is unlikely to grow production. And we're pretty close to, if not having already seen peak production for South Africa. We are certainly also building in far less growth from Russia than they initially had on their minds by kicking in some of the projects. But that is probably pushed out a bit into the future. And we shouldn't forget that Russia could be a pretty competitive producer of palladium because it's obviously linked to their nickel and copper production. So they will probably be some of the last men standing if they would implement some of these growth projects. And there are certainly other projects out there which have currently already quite a high cost base, which will struggle. So my sense is it would have to be really dramatic, a complete disappearance of the Russians from the market, which I don't believe is likely, or a, say, blackout in South Africa, which would stop the mining industry for a month, which is also unlikely. I wouldn't say it's impossible, but it's high risk. So you have to be optimistic on many factors to actually see a palladium price sustainably holding above, call it, or at current levels, simply because of those structural inputs and the sheer size of the surpluses that are likely to come.
Okay. What I'm trying to get my head around is obviously the size of the surplus that's likely to come. Obviously, you've mentioned Chinese recycling rates, but you have also mentioned that we're sort of at peak supply with South Africa and I'd assume, obviously, Russia, like you were saying there, could develop more, but probably won't in the short term, I'd assume. Is this demand driven then? Are we starting to see less demand for palladium? Are we starting to see more substitution in, say, catalytic converters for platinum? Where's most of this coming from? Because obviously...
Combination of reasons, Peter. First of all, that is definitely the case. We can see that the amount of platinum displacing palladium, but there is something in time that could reverse again if the economic incentive would be there. For example, if we can see platinum rising, eventually adding and doubling possibly over the years ahead, if we look at the structural picture there, and then the incentive to reverse that is there. What we should not forget, and I think we can be called skeptical on EV penetration, and it's only going to be localized. First of all, the biggest car market in the world, China, is pushing harder than anyone else, and all the EV growth very much comes from China, and it's government directed to want to be the most competitive EV player in the world, and domestic market will help them with that. That will take quite a bit of palladium demand off the market because that displaces ICE. That ICE displacement is essentially legislated as well in Europe and increasingly regionally legislated in the US as well. So we should not put our heads in the sand and think, oh, yeah, but there are issues around charging infrastructure and there is issues around lithium supply. They are definitely there, but it will not necessarily stop or reverse the trend. And I think the surprises have been consistently on the upside. There will be probably a pause in the rate, but it will not stop. And that will eventually make it very difficult for palladium to hold up. It is just a sheer volume of loss in ICE that would eventually hurt it. We still see plenty of combustion engines being sold, but it's probably half the rate of what we currently have as combustion engines.
Do you ever see a scenario where we see palladium back up to the prices we saw a few years ago, sort of pushing past 2,000 US dollars?
It would have to be an extreme scenario, Peter, where, as I mentioned, South Africa blackout, or because we have seen that with the OEMs, security of supply is absolutely critical, and they'll be prepared to pay anything if there would be a scenario where Russian palladium is completely locked out of the system. It's very difficult to see that happening. You see still quite a bit of Asian buying of Russian metal, not just China, also broader across Asia. And it's despite all the difficulties in South Africa, the mines have been holding up quite well and managing quite well despite the heavy load shedding. And yes, they all mentioned that we're going to struggle this year, but they've been load shedding in South Africa since 2008, not anything close to what you see at levels now. But still, at those levels, the mines are still managing to get through, partly also because they're very integral to the grid in South Africa. They're called the big batteries in the system that are needed to keep the grid stable. And as a result, they get treated preferentially almost by Eskom. They never stop. It is basically they have to take load off the grid, but they don't stop. And it would have to be stage 8, I would say, for days in a row, and then you would see the real production damage. But at stage 6, there is perhaps some damage, but it's not in 20-30% level. So it would have to be that dramatic to actually make a difference. It's very hard to see palladium back at 2000 without those events happening.
And I wanted to touch on where your thoughts are with Russian supply. I think we discussed last time that it's becoming harder and harder for them to access new equipment and to actually repair some of the operations that they have going on at the moment. And we're seeing there was just a report that came out that Polymetal, for example, their reserves they're really finding it hard to keep up with their reserves and they're dwindling quite a lot. And I'm assuming the same will probably be for the palladium and platinum mines and nickel mines in Russia. How can we expect them to keep up with demand or even keep up supply if there are these issues going on? What's your view on this in terms of, obviously we've been talking about Russia's really the one that potentially could hold up palladium supply, but if they're having these issues themselves, I mean, is there a scenario where that does fall off a cliff as well?
Yeah, I think falling off a cliff, it is well, let's call it a slow puncher that could accelerate in the year ahead, because they've used a large fleet of Western equipment. A lot of the parts they had access to are now slowly and very surely starting to disappear. There's still access to certain grey market materials that they see, but it's quite a broad fleet of complicated equipment and sophisticated equipment. And the first signs were coming through in the set of results. They certainly have postponed some of the big projects they were taking on, because that was what we also saw is hurting the palladium market in the years ahead. Is there's some really large-scale palladium supply jumps coming from Russia. Now that is being pushed out in the future, but the further you push that in the future, it's also where the real damage to palladium demand is heading. It's when the BEV penetration starts to pick up. And as a result, we still have questions. Would they be able to justify those projects at those points in time if they would also face, say, a $500-600 palladium price? Could you still make those projects work? The essence at the moment is they do not have access to the mills and the flotation circuits that they thought they would have from the Western companies they had contracted. So everything is being pushed out in the future. And then I think linked to that is also the question, will the overall access to capital, it's obviously still a profitable business, but as that starts to deflate the profit flows, can they still justify the capital amounts and finance the capital amounts that they need for those expansions? So there's a combination of reasons why you should be fairly cautious on what volumes of palladium could still come from Norilsk beyond what they currently produce. And you can see that in their guidance that has actually been brought down. And I think there's some real issues that they're facing in getting or keeping the production standing where it is, let alone grow.
Okay, but from what you're saying there, by the time that their growth does shrink, then the EV penetration might counteract that anyway, and it'll probably level out. Okay,
yeah.
That makes sense. Where are you on platinum at the moment? I think in a lot of circles, especially in the mining industry, we saw reports coming out towards the end of 2022 where things were looking a bit more bullish for platinum in 2023. We saw a bit of a price increase towards the beginning of this year, but again, similar to palladium, we've seen about a 10% drop, I think, since the beginning of January. Is this just inflationary measures, something that's they're sort of tracking along with other PGMs because they've been hit? And are we looking at a better year for platinum? Is that the rising star of the PGM market this year, do you think?
It's not, call it immediately evident that 2023 would be a great year. So we shouldn't forget that platinum is firstly exposed to the car industry, then secondly to the industrial side of things, and thirdly to the jewelry side of demand. And if one heads into a recessionary environment, that is just not a good picture for any metal that is exposed to those sectors. So we don't think necessarily this is the year of delivery for platinum. Where platinum is partly supported is this big switch from palladium into more platinum heavy trimetal catalysts, and that is helping platinum from a volume perspective. What we need to see in the years ahead is the first signs of a hydrogen pickup. I think that's a bit too soon now to build into called optimistic views of platinum. We certainly see that happening in the second half of this decade, where you can see those volumes and price support to come through. And as such, this year we're not seeing, say, the platinum rise offsetting the damage from rhodium and palladium. It's a bit too early for that.
Okay.
We definitely see it among the three metals, though, the one that has, call it, the strongest underpin to perform this decade.
Okay. And a lot of this performance is based on substitution from palladium, and then really
in the combustion engine, in call it the shorter medium term. Yeah.
Right. And then looking further forward, penetration from hydrogen, essentially.
Yeah.
For those, obviously, it's still fairly new tech. I feel like a lot of people have spoken about hydrogen technology, and obviously there's green hydrogen that people float around a lot. But maybe you could just remind us why is platinum so essential for hydrogen technology?
There's a particular reason, which is obviously the fuel cell, and the volumes in fuel cells for platinum would be in the mobility sector. Now, the race for the light duty vehicle sector has probably been run. Technology from a BEV perspective will probably see that dominate the light duty vehicles. We should not probably forget that in certain applications, particularly the heavy vehicles, batteries do not answer all the requirements. Particularly the weight of some of the larger vehicles is an issue. And I think in Europe, for example, BMW is really reassessing, for example, X7s, should there not be a fuel cell power plant, and they're quite convinced that that could actually still find a way out, or an application. Now, that's not necessarily giving you the applications or the volume of applications that would give platinum a lift. What is probably much more likely is in heavy duty. Heavy duty at the moment would, although there are quite a few electrical trucks coming heavy duty as well, coming to the market, the net ranges are still limited for many in order to be called a large seller into the heavy duty trucking market. In time, you will see the expansion of the hydrogen distribution networks, which will allow that called fuel cell application for heavy duty trucks to come in. And there are also signs that in getting to an electrical network, if you would have to put up a petrol station and replace that with a charging station for 20 heavy duty trucks, the infrastructure constraints on getting the grid there and to be able to deliver that power to recharge 20 heavy duty trucks, the constraints are probably bigger for that than putting two hydrogen pump stations there. So there are other pain points in the electrification and call it decarbonization of heavy duty fleets that could hopefully get the fuel cells up in volumes. We should not, and I want to be clear there as well, the diesel engines for heavy duty are going to last for a long time in a sense of new heavy duty diesel engines. But there will be a place for fuel cells, and fuel cells require platinum. And we think there is still, if we look at a global picture, China is well ahead on the rest of the world again. We could actually see some volume coming up that will make a difference to the platinum market.
And when are you expecting this difference or this volume to really start taking effect?
Late end of this decade, early 2030s. That's when you see the first real numbers. There will be lots of hydrogen around by that time because they're ramping up green hydrogen projects, and we should not underestimate the scale of that commitment that has been given now by governments all around the world. And I think, yes, there are still quite a few fundamental questions on, is this the wisest way of spending public money at this stage? But there is certainly a political will to push hydrogen. And by the time you have availability of hydrogen, the applications of hydrogen are going to explode as well. It is just getting the hydrogen there first. And that is now happening. And the IRA has made a big difference in the US as well on how people see the future of hydrogen and how it could work. The one risk that should be highlighted, I think, is one can burn hydrogen in conventional diesel engines. And that is a way of decarbonizing. It doesn't necessarily mean it's the cleanest way because you still produce NOx, but it's very manageable. But it could still give you a risk to that platinum outlook if that turns out the quickest and cheapest way of actually getting to net zero.
Okay. And one last question, I guess, especially on the platinum side or the fuel cell side. Obviously, we see substitution with autocats, with palladium and platinum. Is there a possibility if, say, platinum price does does increase too much, especially on the hydrogen fuel cell, could we be looking at a substitution game there with palladium, or does the fuel cell require platinum? Are the properties interchangeable?
Fuel cell is pretty much locked into platinum, and it is you have to distinguish between called the fuel cells, the electrolyzers. Electrolyzers are certain metals. There's a lot of work being done on thrifting because it's got much more unique metals in there. The platinum is very difficult to thrift out because you're looking to achieve certain durability requirements, and that is often a bit misjudged, is that the environment inside a fuel cell is quite tricky. It's quite acidic at the point where the reactions happen, and very few metals can last as long and are as active as platinum for the reactions required. So it's very difficult to find an easy alternative. Plus, thrifting has to be done very carefully because you want to make sure, and particularly in heavy duty applications, that your durability is there.
Okay, so no substitution then really on the horizon from platinum.
Not easy to see how that will happen.
Brilliant. Hank, thank you for your time today.
Pleasure.